The visual elements of chart analysis are greatly enhanced with candlestick signals and patterns because graphically you can see what's going on in investor sentiment. For example, we know what a morning star signal looks like. We also know what a J-hook pattern looks like. So in a market like today where it's a little bit lethargic, we don't get bent out of shape because we anticipate that the pattern is going to be the same as what patterns have occurred from these in this type of situation year after year, decade after decade, century after century. Investor sentiment works constantly in the same way. So even though the market pulled back today, stochastics aren't in the overbought area, one of the indicators that we're still in an uptrend. And number two, we're coming out of a J-hook pattern, which gives us the target calculation that if this is wave one, wave 3 should be approximately here, which would coincide with testing recent highs. Will there be times when a pullback can occur or a reversal can occur when the elements aren't completely in alignment? Certainly, but to offset that, if you analyze one index like the Dow and it's sluggish, and the other index like the NASDAQ is flat, it basically tells us there really hasn't been a change of investor sentiment. You want to stay with price movements on the bullish side. And we can also see that occurring in chart patterns that we're familiar with. We made good money with ARNA when it broke out of this little fry pan bottom, had a big price move. We stopped out when it came back down through this level. Again, a very mechanical trade. We didn't have to use emotions. We had just used the common sense that was built into candlestick signals that told us that if this was exuberant buying starting to occur in an overbought condition, we should start looking for a sell signal. Where's the most obvious place to tell us the sellers are in control? Did not want to see it come back down through the open of the last gap up price move. Now we can see that it's kind of hovering right here on the T-line. As it pulled back after trying to bounce back up, it came right back to the T-line, did a hammer signal and a doji, right on a T-line, which is obviously a major support. Today, when we started seeing buying come in spite of the market selling off, that told us that there was going to be a reaction, a bullish reaction, confirming these signals that we might be in a bigger J-hook pattern, and we were able to catch a good price move in this trading day by itself. This is not because we're any great stock pickers. This is because the reoccurring previous pattern told us that if they were doing dojis right here on a support level, and you can see the bulls coming in, that basically told you the selling was over, that it's time to get back into this trade. That'll be it. We'll see you in the chat rooms.